Welcome to this deep dive. Today, we're really cutting straight to the core of Lucid Group, Inc. We're going to be examining their latest quarterly report, the 10Q, for the 3 months ending March 31st, 2025.
Yeah, and for you listening, if you don't normally wade through these SEC filings, a 10Q is basically where a public company, lays out its numbers, what management's thinking, and the potential bumps in the road. So our mission today is pretty straightforward. Pull out the key stuff about where Lucid stands financially and operationally, and importantly, just based on this document.
Right, like a shortcut to understanding what's really going on inside the company based purely on their official filing.
Exactly.
All right, let's jump right into the financials then. Revenue for Q1 2025. What are we looking at?
Okay, so they reported $235.0 million in revenue for the quarter.
$235 million.
Okay, but there's a little detail. $5.1 million of that came from a related party.
Ah, okay. And how does that stack up against last year, Q1 2024?
Well, a year ago, the total revenue was lower, $172.7 million. But the related party piece was much, much bigger than $51.4 million.
Oh, wow. So revenue is up overall, but the slice coming from that related party is way down.
Precisely. Which, could suggest they're maybe trying to broaden their customer base, rely less on those internal-ish deals. For you listening, maybe a sign of striving for more, let's say, organic growth.
Interesting angle. Okay, so revenue's up, but profitability.
Yeah.
Are they losing less money? That's the big question usually.
It is. And the net loss for Q1 2025 was $366.2 million.
Still big number, but how does that compare?
It's actually a noticeable improvement. In Q1 2024, the loss was way higher, $680.9 million.
Okay, so they nearly half the loss year over year. Well, it's movement in the right direction at least.
Definitely a positive trend, shows maybe some gains in efficiency, but I mean, it's still a long way to go to actually making money, something for you to keep in the back of your mind.
Absolutely. And zooming out a bit, that accumulated deficit,
Yeah.
what does the total hole look like now?
Yeah, that really puts the journey in perspective. As of the end of March 2025, the accumulated deficit was $13.3 billion.
13.3 billion. That just underscores the sheer amount of capital needed to even try and compete in this EV space.
It really does. Huge upfront costs, massive ambition.
So they're spending big. Do they have the cash on hand to keep the lights on, keep building? What's the cash situation?
Crucial question, always. The report shows $1.855 billion in total cash, cash equivalents, and restricted cash. That's as of March 31st.
And how does that compare to, say, the end of last year?
It's actually up a bit. At the end of December 2024, it was $1.607 billion. So their immediate financial cushion has improved slightly.
Likely from more fundraising, I imagine.
Yeah, that would be the main driver.
Okay, so they have some cash. Where's it going? What are the big expense categories this quarter?
Well, the biggest single cost, as you'd expect, is the cost of revenue, basically, the cost of building the cars they sold. That was $463.6 million in Q1 25.
How does that compare to last year?
It's up from $404.8 million. Not too surprising if production is changing.
Right. What about R&D and the general overhead, SG&A?
Okay, so R&D actually decreased. It was $251.2 million this quarter, down from $284.6 million last year.
Interesting. Belt tightening there.
Could be. And then selling general and administrative costs, SG&A, were pretty flat, around $212 million, basically the same as last year.
So total costs were...
Total costs and expenses ticked up just slightly to $927.9 million from $902.7 million. But here's the key thing.
Yeah.
The loss from operations actually went down. It was $691.9 million this quarter versus $729.9 million a year ago.
Ah, okay. So even though total spend was slightly up, maybe because of higher cost of goods, they managed the core operational loss better.
Exactly. They squeezed out some efficiencies somewhere, or maybe the revenue mix helped, even with R&D down a bit.
Okay, that's a helpful nuance. Now, there's always this other income expense net line that can have some wild swings. Anything major there this quarter?
Oh, yeah. There was a big one. A $281.7 million positive swing from the change in fair value of derivative liabilities.
Okay, translate that for us. Derivative liabilities.
Yeah, it gets technical fast. Basically, these are linked to their redeemable convertible preferred stock issued to that related party, IRE. Think of them like, well, not exactly bets, but financial instruments whose value changes based on things like Lucid's own stock price.
So the value of these things on paper went up significantly.
Correct. And it's a non-cash gain, mostly, but it hits the bottom line in the report. This line item didn't even exist in Q1 2024 because that preferred stock was issued later.
So it makes the net loss look smaller, but it's not from selling more cars or cutting costs directly.
Exactly. It reflects changes in the estimated value of these complex financial agreements. There are also smaller changes related to warrants and other related party securities. It adds volatility to the reported numbers.
Got it. More about paper value changes than operational cash flow. Okay, let's shift gears then. Away from the pure numbers, what's Lucid actually doing? What operational highlights or challenges did they flag?
Fundamentally, they're still focused on designing, engineering, and building high-end EVs. The Lucid Air is their main product now, and the Gravity SUV is supposed to be coming soon.
And the report talks about progress on
Yeah, the usual stuff. Ongoing business planning, expanding sales and service networks, technology development, ramping up their factory in Arizona LPM1, and opening more retail studios. Standard growth activities for a company like this.
and I think you mentioned belt tightening earlier. Was there anything specific on that?
Yes, they mentioned the restructuring plan from May 2024. That involved workforce reductions, trying to optimize operating expenses. They said it was completed in this first quarter, Q1 2025.
Okay, so those R&D cuts we saw might be partly related to that.
Could well be. It lines up. Of course, the challenge for them and for you, the listener, to consider is how they balance cutting costs with the need to keep innovating and growing, especially in such a competitive field.
Good point. It's a tough balancing act. Now, revenue streams. Where exactly is the money coming from? You mentioned vehicle sales.
Right, that's the main one. But if you strip out the accounting complexities related to residual value guarantees, or RVG, the direct vehicle sales revenue was actually $35.2 million in Q1 2025.
35 million. How does that compare?
Well, it's down quite a bit from Q1 2024 when it was $67.5 million on the same basis.
Down significantly. Okay. What else contributes to revenue?
They also recognize some revenue over time from the over-the-air software updates, the OTA updates, during the warranty period. And they noted that vehicle leasing revenue was, quote, immaterial, not a big factor yet.
Okay. One thing that gets a lot of buzz is their deal with Aston Martin. What did the 10Q say about that partnership?
Yeah, that seems like a really key strategic play for them. The report confirms they received technology access fees, paid partly in Aston Martin shares.
Oh, interesting. Shares.
Yep. Valued at about $25.6 million at the end of March. They also got cash, and there are ongoing fees for helping Aston Martin integrate Lucid's tech. Plus, Aston Martin committed to buying a certain amount of powertrain components from Lucid.
So it's a multifaceted deal: tech licensing, services, component supply.
Exactly. And because a lot of this is for future deliverables, Lucid is carrying a significant chunk of deferred revenue related to this deal, about $113.4 million as of March 31st.
Wow. So that's revenue they expect to recognize later as they deliver the tech and components.
Right. And strategically, this shows Lucid trying to monetize their technology beyond just selling their own cars. It can make their business model a bit more diverse, maybe more resilient. Something for you to watch.
Definitely. Okay, given the ongoing losses, the report must talk about liquidity, right? Their ability to fund operations.
Oh, absolutely. They're very clear about it. They state they've had operating losses and negative cash flow since day one, and they expect that to continue for the foreseeable future.
No surprise there, but good they state it plainly.
Yeah. And they highlight their funding activities to counter this. They mentioned that $750 million delayed draw-term loan facility with IR, the related party,
Right, the big investor.
and also the big stock offerings, both public and private, common and preferred, that they did in 2024, which brought in substantial cash. It just reinforces their ongoing need for external capital.
Let's dive a bit deeper into that financing side. What kind of debt are they carrying?
They've got a few main pieces. First, there are those convertible senior notes, $2.0125 billion worth, paying 1.25% interest and due in December 2026. They specifically call these green bonds.
Green bonds. Okay. What else?
They have a credit facility with Gulf International Bank, or GB. That facility limit was actually increased recently to 1.9 billion Saudi riyals, and they had about SAR 725 million drawn on that at the end of March.
So a mix of convertible debt and bank lines. Anything else?
There's also an asset-based revolving credit facility, an ABL. No borrowings outstanding on that one, but they're using it for about $58.3 million in letters of credit. So different tools in the financing toolbox.
And you mentioned that preferred stock issued to IR earlier. That seems like a pretty important piece of the capital structure, too.
It really is. The redeemable convertible preferred stock, Series A and B, issued to IR in 2024. It's significant. For one, it gives IR substantial voting power.
So a lot of influence over the company's direction.
A lot of influence. Plus, there are conditions under which Lucid might have to settle this stock in cash down the road. It just cements how central IR and, by extension, PIF are to Lucid's funding and
It
governance.
definitely sounds like a complex financial balancing act, and I think I saw something about more debt activity after the quarter ended, a subsequent event.
You did. In April 2025, so after the period covered by this report, Lucid issued another $1.1 billion in convertible senior notes. These ones pay 5.00% interest and are due way out in 2030.
And they used that money.
Partly to buy back some of those 2026 notes we just mentioned. It's often called liability management, basically pushing debt maturities further into the future. But of course, it means taking on more debt overall and at a higher interest rate in this case.
Right, kicking the can down the road, but maybe buying themselves more time. Okay, shifting away from pure finance, legal issues and risks. Any major lawsuits ongoing?
Yeah, the report details a couple of things.
Okay.
First, there's that securities litigation stemming from statements made back in late 2021, early 2022. It's shareholder lawsuits, basically.
Where does that stand?
It's still grinding through the courts. A motion to dismiss was partly granted, partly denied. An amended complaint was filed, and now there's another motion to dismiss pending. So, ongoing.
Okay. Anything else significant?
The other one they mentioned is the lawsuit in Illinois about their direct-to-consumer sales model. But that one was actually dismissed, and Lucid won the appeals. So that specific challenge seems resolved for now.
Good news for them on that front. Now, the risk factors section in a 10Q, it's usually a long list. Any standouts for Lucid right now?
Oh, it's definitely comprehensive. You get the typical risks for a company at this stage. Limited operating history, still losing money, challenges in controlling costs, the need to attract and keep customers, potential supply chain headaches, manufacturing scale-up difficulties.
Standard stuff for an EV startup, really.
Pretty much. And intense competition, of course. That's huge in the EV world.
Were there any risks that felt particularly pointed or specific to Lucid's current situation?
Yeah, a few jumped out. The heavy reliance on external funding is a constant theme, the need to raise more capital. They explicitly mentioned the significant influence of PIF and IR as major stockholders, which could affect other investors.
Right, the concentration of ownership.
Yeah, exactly. Also, the unpredictable demand for EVs, how things like gas prices or changing government incentives could impact sales. That's a big external factor.
Explains that.
They also point out potential limits on using their past losses, those net operating losses or NOLs, to offset future profits for tax purposes, and the accounting for warrants as liabilities, causing potential swings in reported results based on stock price moves.
And things like internal controls, market sentiment affecting the stock price.
Yep, all in there. Standard disclosures, but important context. They also mention things like lockup agreements for IR shares, anti-takeover provisions, stuff that could make acquiring the company harder.
Okay, a lot to digest there on the risk front. Let's talk about leadership. There were some pretty big changes recently, weren't there?
Yes, definitely notable. Peter Rawlinson transitioned from CEO to a role as strategic technical advisor to the chairman, effective back in February 2025. The report references his transition and consulting agreements.
And who took over as CEO?
Mark Winterhoff was appointed as interim CEO, the principal executive officer.
Yeah.
He received a grant of restricted stock units tied to taking on that role.
Interim CEO. Okay. Any other management notes?
They reference Gagan Dhingra's promotion, though that was detailed in a previous filing. And, importantly, the report includes the required certifications from the new interim CEO, Mark Winterhoff, and the CFO, Taoufik Boussaid, basically attesting that the financial report is accurate and fairly presented. Standard procedure, but crucial.
Right, the sign-offs. Okay, we've mentioned IR and PIF quite a few times. Let's really focus on those related party transactions. It seems like they're deeply woven into Lucid's fabric.
Oh, absolutely. You really can't understand Lucid's financials without looking at these. The dealings with IR, PIF's affiliate, are extensive. We talked about the term loan, the private investments in stock.
Right.
But there's also a joint cooperation agreement with the Saudi Human Resources Development Fund, HRDF, for training workers in Saudi Arabia. That's linked to IR too.
Okay, so it touches operations in Saudi as well.
And then the Aston Martin deal. Aston Martin is also linked to PIFire. So that whole strategic technology arrangement, the share exchange, the cash, the service fees, it's all intertwined with their major shareholder.
It really is central.
Yeah. The report explicitly breaks out related party revenue and expenses in the statements, and they even mention holding time deposits with Gulf International Bank, GED, which is also noted as a related party. So yeah, these connections are crucial for understanding funding, strategy, everything.
Wow. Okay. And lastly, there was an update to that JEB credit facility you mentioned earlier.
Yes, just a final detail. In February 2025, they amended and renewed that facility. The main change was increasing the total limit to SAR 1.9 billion.
So more potential borrowing capacity there.
Right. They also updated the termination date, tweaked some fees like the administration fee, and added commitment fees for the unused portion. And they added a specific sublimit of SAR 100 million just for issuing guarantees. Minor adjustments, probably giving them a bit more flexibility, especially in the Gulf region.
Okay. So we've gone through the financials, operations, risks, leadership, related parties. Quite a deep dive into this 10Q. If you had to boil it down, what are the main takeaways?
Well, I think this report paints a picture of a company very much in transition. You see some positive signs like revenue growth overall and, importantly, shrinking net losses compared to last year.
But
But direct vehicle sales were down in the quarter, the losses are still huge, and the accumulated deficit is massive. They're clearly investing heavily in growth tech, manufacturing while also trying to manage costs, like debt restructuring.
and the financing is key.
Absolutely critical. The financial structure is complex, lots of debt, different kinds of stock, and this incredibly deep reliance on their major related party investors, PIF and IR. Their influence is undeniable. And that long list of risks just highlights how many hurdles they still face in a super tough market.
That sums it up well. So, for you listening, after hearing all this detail pulled directly from Lucid's own report, what stands out most? Thinking about their financial health, their operational progress, those significant risks.
Mhm.
What's your take on the long-term sustainability of their current path? Definitely something to chew on. Thanks for joining us on this deep dive.